NVIDIA controls 92% of the global GPU market, the backbone of AI. Their chips power OpenAI, Meta, Google, Amazon, basically every player in the AI arms race. And the result? NVIDIA became the first company ever to hit a $4 trillion market cap. Now, they've just been cleared to sell AI chips to China again, and some analysts say this could push the stock even higher. But at $177 a share, NVIDIA is up more than 280x over the last decade. That's generational wealth created for early investors. But here's the question. Can this rocket keep flying, or are we staring at peak NVIDIA? Well, here's what I know. Last quarter, revenue jumped 56%, net income soared 59%, and 90% of their sales now come from AI data centers. The new Blackwell chips are already the fastest ramping product in company history, $11 billion in Q4 alone. But there's a problem. It's China. And they just called NVIDIA a monopoly. There's also power grid bottlenecks and consumer concentration. Just 2 customers of NVIDIA account for almost 40% of NVIDIA's revenue. If either one of those pulls back, well, you could expect the stock to take a hit. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. In this video, I'm going to break down NVIDIA's insane growth story, the catalysts that could push it even higher, and the red flags that might end the entire run. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing because I don't push products. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. So, is NVIDIA still the king of AI stocks, or are we at the top of the mountain? Let's find out. NVIDIA dominates the market for accelerated computing and AI hardware. In fact, they hold 92% of the entire GPU market, whether it be for personal computing, gaming, or data centers, and this is absolutely incredible. The company's next-generation chips, such as the Blackwell series, form the backbone of AI models used by some of the largest companies in the world, including OpenAI, Meta, Google, and of course, Amazon. And because of all of this excitement, NVIDIA became the first company to hit a $4 trillion market cap, and it's now received the green light to sell AI chips into China again. Now, some analysts expect that this could catapult the stock even higher. But my question is, can NVIDIA actually climb further, or is this really as good as it gets? Now, let's talk stock prices, right? Because let's be honest, that's probably why you're here, right? You can scan this QR code if you want to follow along. At the time of recording, NVIDIA is trading at around $177 per share, though it's set to open around 2.5% lower. I'll explain why in a bit. So the stock has cooled off a little bit, but it's still miles ahead of where it started this year's run. And if you zoom out to just say 10 years ago, the stock is trading more than 280 times higher than it did back then. That is generational wealth that was created. It's the kind of chart that long-term investors can only dream about, right? Now, if we compare the same period last year, revenue exploded 56% to $46.7 billion in the most recent quarter. And for a company of this size, NVIDIA is nothing short of amazing. Meanwhile, gross profit jumped nearly 50% to approximately $33.8 billion, demonstrating the incredible pricing power that this company possesses. Operating income also rose around 52%, while net income also climbed 59% to $26.4 billion. Now, most of this growth is from NVIDIA's data center segment, which is essentially their AI business. The segment's revenue rose 56%, which accounts for nearly 90% of the company's total revenue. NVIDIA's also got $11.6 billion in cash, which is around 36% more than the same period last year. That gives them a lot of flexibility to allocate to some CapEx or more R&D. So bottom line, NVIDIA, well, they're not just growing, but they're scaling profitably with margins and cash flow that most companies they could only dream of. So what can push the stock higher from today? Well, for that, we need to look at the growth catalysts. We'll start with Blackwell. Management disclosed that the new chips brought in $11 billion in revenue in Q4, making it the fastest product ramp in company history. Customers started shifting their spending from the old Hopper chips to the newer Blackwell GB series chips for their superior computing capabilities. Even better, NVIDIA plans to roll out new versions of Blackwell every single year. And this includes an upgraded GB300 Blackwell Ultra and even newer tech, Rubin, that's slated for 2026. This pushes the platform towards annual cycles, which shortens time to performance for buyers, which is very similar to Apple's model. But it's not just a story about chips, it's also about the customers. Jupiter, which is Europe's first exascale supercomputer, is now running on NVIDIA's tech. This means that massive scientific campaigns, such as climate change and medical research, will be powered now by NVIDIA. Now researchers can run at more than double the speed with high-performance computing and AI workloads compared to the second fastest system in the continent, all thanks to NVIDIA. And even at the consumer level, NVIDIA is upgrading their RTX power in the cloud with GeForce Now, allowing customers to stream games. Unlike before, gamers can now experience high-end graphics without having to shell out for a pricey PC. And wins like this tend to snowball into more orders for NVIDIA's hardware and software, further solidifying their presence in the market. Also, NVIDIA's software tools make it easier and faster to build with AI. The new NVIDIA AI blueprints, in combination with Microsoft's Trellis application, provide creators the platform to generate 3D objects 20% faster on optimized builds, and the RTX Remix tool helps gamers and developers upgrade older games with modern effects. More creators using these tools means more demand for NVIDIA gear to run them. Lastly, NVIDIA is planting the seeds for future demand. They're funding K-12 AI education, which incubates the next wave of developers who will start their learning journey on NVIDIA's tools. They're capturing the next generation to get used to their gear at the earliest point possible. So whether it's supercomputers, gamers, or even kindergarten kids, NVIDIA is everywhere, and that is how you build a moat. But can the NVIDIA gravy train keep going? Well, the momentum is huge, but as we've discussed on my Discord, there are real headwinds that can bite into the story if they break the wrong way. First up is China. China's government really doesn't want NVIDIA's chips there. And with all the geopolitical rhetoric, I can't say I blame them. But yeah, the latest today is that China is saying that NVIDIA violated their monopoly law following the acquisition of Mellanox in 2020. For me, I see this as an excuse to just try and keep NVIDIA away. That's why the stock is down about 2.5% in pre-market trading, at least at the time of recording. Then we have a problem with power. AI buildouts are running into a very old constraint: electricity. Multiple reports indicate that data center demand could increase by more than double by 2030, and grid bottlenecks such as power transmission and cooling are already slowing down deployments in key regions. If power access lags or even gets interrupted, even the best GPUs will be as good as a doorstop. And this poses a problem for NVIDIA because it stretches their customer rollouts, which ultimately affects their revenue generation and spending. And then there's a problem with customer concentration. Recent filings and news coverage indicate a significant skew in favor of NVIDIA. Customer concentration means that only a handful of buyers account for a very large slice of the company's quarterly revenue, of which The company disclosed that one customer, that they're going to call customer A, made up 23%, and customer B, 16%. That means the demand ultimately traces back to just a few names, which could lead to volatility in their P&L if just one or two of these companies change decisions in their purchasing. So while NVIDIA looks invincible, a few cracks in China, power infrastructure, or even customer demand could quickly change the entire narrative. So with all that out of the way, is NVIDIA a buy today? Well, let's start with what the analysts say. A consensus among 46 analysts that cover the stock rate NVIDIA a strong buy. The score is 4.7 out of 5, which is outstanding. There's a high target of $250 that suggests as much as 40% upside over the next year. And I think it's possible. Their product pacing, software, and hyperscaling bolster demand and keep the growth story intact. I will be watching, though, to see how NVIDIA navigates scaling bottlenecks in power and packaging. But yeah, if you look up AI stock in the dictionary, NVIDIA's picture or logo is right there. So that's my take on NVIDIA. I have one last question for you. Do you believe in what NVIDIA is doing, and can the stock go any higher from here, or is this it? Let me know in the comments below. I do read them and I do want to get back to you. While you're there, don't forget to like and subscribe. It helps others find this video, it supports the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today. Thank you so much for watching, and I'll see you next time.